Thanks for joining us for another My Wealth webinar. My name's Jeff Hunter. I'm with the Townshend, Somani and Hunter Group. Also on the line is Raheem Somani, Senior Investment Advisor with our team here at Canaccord. Today's a great call. We have Charitable Impact and Eugene, Wong, and Lawrence on the other line representing the firm. They have a great solution. They provides a lot of flexibility for your charitable donations and tax efficiency from it. I'll let them talk a little bit more about their background, but actually I probably worked with Eugene longer than anyone else in this industry. We both started at Haywood before moving over to Canaccord, and then he moved over to Charitable Impact afterwards. But Eugene and Lawrence want to tell us a little bit more about your backgrounds and just how you guys ended up with Charitable Impact and the opportunities you have there.
For sure. And thank you, Jeff, for the introduction, and happy to be here. So yeah, thank you for having me, and Lawrence as well. So yeah, it's funny because Lawrence and I both have a background in wealth management. Lawrence just recently joined us about 4 months ago from Canaccord Genuity. And I myself, had two separate stints at Canaccord and spent probably 14 years of my career there. So yeah, our background is definitely from wealth management, but I made the venture to go into the charitable sector just over 2 years ago and joined Charitable Impact, and it's been amazing. It's fantastic because I can still sort of leverage the experience and knowledge that I had in my previous roles, but it's been really great to kind of learn more about the charitable sector and be a part of it. And so now we're really trying to support both advisors and donors with their charitable giving needs. And like Jeff mentioned, donor advised funds and what Charitable Impact offers is a great solution for anyone that gives and wants to support different causes and charities. So yeah, today we're probably going to just spend a little bit of time talking about that and how it works. But yeah, appreciate you having us, Jeff, and yeah, we'll be happy to kind of go through our presentation today. Sorry, you're on mute, Jeff.
Yeah, let's just start and get into the weeds on this. Like I said, for those on the line, it's a great solution, provides a lot of flexibility and not well discovered or discussed. This is a group that is one of the leaders in the space. We've got a special relationship with them, and they've provided a lot of flexibility for that side. And that side's not always discussed as much, but it does provide more options, and options are great, and some further knowledge in it and how you can employ it yourself to give more flexibility in what you do is a great option. So yeah, Eugene, Lawrence.
Thank you. So yeah, if you don't mind, I'm going to share my slides now, and we'll get through that. Okay. Jeff, can you see my screen? Okay. So yeah, today's presentation is really just going to be a quick introduction to donor advised funds, because one of the things that we find when we speak to new advisors and new clients and donors is we often hear the question of what is a donor advised fund, and what does it mean to me as a donor. And so we really like to start a lot of our conversations with making sure that the people that we speak to understand what a donor advised fund is and how it can apply to them, because it means different things to different people, and we certainly want to ensure that everyone has a really good fundamental understanding of it. So I guess at its base level, a donor advised fund is a charitable investment account. It's an account that you can use to consolidate your giving, and really kind of ensure that you're doing things in the most tax efficient way. So the way that Charitable Impact works, and it's usually the same with most other donor advised fund solutions. We're set up as a public foundation, so we're actually a registered charity with the CRA, and as a result of that, we are able to issue tax receipts and offer different types of charitable solutions and charitable giving vehicles that private foundations or other types of platforms may not be able to offer. So we are a charity at heart, but we also offer a solution for donors that is quite unique, called the Donor Advised Fund. So with the Donor Advised Fund, most people associate donations with cash, being able to donate cash or checks directly to a charity or using a credit card to fund a gift. Donor advised funds can do that as well, but it also has the unique ability to accept other types of assets that aren't traditionally, kind of considered by donors or charities. And so, we look at things like publicly traded securities, private shares, even real estate, things that have value, but maybe aren't as easy to donate to a charity as they could be. And so, donor advised funds are a solution for that. They do make it easier for donors to consider giving other types of assets beyond just cash. Who can use a DAF? Anyone, really. So we have individuals primarily that use donor advised funds. We also have families that pool their assets together and use them at sort of at a group level. We have companies, corporate donations, corporate donors that use donor advised funds, and even people that are just maybe not related with each other, friends or colleagues, will pool assets and sometimes use donor advised funds in conjunction with one another as well. So one of the main, benefits of using a donor advised fund is it allows donors to maximize their philanthropic impact. And we're going to go into some of that detail today in terms of what are some of the tax benefits of using a donor advised fund versus just giving through other traditional means like credit cards and checks. So just a quick background on donor advised funds in general. So they've actually been in Canada for a very long time. We actually had the first donor advised fund set up in Vancouver in 1952, and so that donor advised fund still exists today. It's called the Vancouver Foundation. Like ourselves, it's a community foundation, but it's more community based. So it's really centered around the donors in the Vancouver region as well as causes and charities that are within the same Vancouver community. So it's still running strong today, but it is actually the first donor advised fund that was established in our country. And today we have many donor advised funds, including Charitable Impact, that are available. In North America, it's actually the fastest growing charitable giving vehicle out there. So, when you compare it to charitable remainder trusts, when you compare it to private foundations, community foundations, donor advised funds are actually by far the fastest growing vehicle in both Canada and the US. And just to give some background on what that looks like in Canada, the most recent statistics that were rolled out on donor advised funds indicated that there's probably over $16 billion in donor advised fund assets in the country as of 2024. And so that's grown considerably. I believe the last statistics that ran probably around 2021 or 22, the number was around 12 billion. So it's grown significantly over the last few years and will continue to grow at that rate for the coming years as well. Also in the US, there's 3.5 million donor advised funds in the account in the US today, and that's probably close to 4 million now. So just by the numbers, just for that 1 year in 2024, they received $89 billion in donations just through donor advised funds. And they also made $64 billion in grants. So those grants are considered the funds that are actually dispersed out to different charities and other foundations. So what's really driving donor advised fund growth, both in Canada and the US? I think it comes down to these four categories, which I'll break down quickly here. So the first one is convenience. If you imagine yourself as a donor today and how you give, you're typically providing your credit card on a website. You're typically writing a check out to your church or to your religious institution, or even you're just handing cash over to a different charity. Those are all ways that people give today, and that will continue, but that's gradually on the decline because of security risks, because of postal strikes, because of the inconveniences of having to walk a donation over to a charity. More and more donors are using donor advised funds because it does allow you to make your gifts electronically and lets you do everything online through a website or app. So for instance, for Charitable Impact, we have an app that's downloadable on an iPhone or Android, and you can make all your gifts through one app and do that throughout Canada. So those platforms like ourselves, it supports all 89,000 charities that are registered in Canada, as well as some that are global as well. Simplicity. So donor advised funds are actually a lot more simple and cost efficient compared to private foundations. A lot of the donors that we look at and talk to, they are quite affluent and they do consider the opportunity to potentially open up private foundations. And what usually steers them in the direction of a donor advised fund instead is that it really doesn't require them to do any administration or work with the CRA. Which, when you're looking at a private foundation, those are the main things that you have to consider. There is going to be a setup of a corporation or a trust that begins the process and then registering that entity as a charity and getting the CRA to approve it and then having annual audits and filings. That's a lot of work for your average donor that really just is focused on giving and wants to do it in a tax efficient way. So there are probably better ways to achieve that without having to create a second job for yourself as a donor. And so private foundations are on the decline in Canada, and donor advised ones are kind of replacing them as kind of the go-to vehicle for charitable giving. Advisors are another huge part of donor advised fund growth as well. I think as our advisor teams in Canada are becoming more versed on donor advised funds and charitable giving solutions and being more involved in philanthropic planning, it's just becoming more of a norm for it to be part of the financial and estate tax planning process. So that's where advisors really help us and help other donor advised funds is they actually support the usage of donor advised funds and really advise clients to do things in a more tax efficient way than they could on their own. And so that's where the value of the advisors really comes through, is that they understand every client's financial situation and what it takes to do things in a better way and pay less tax. Finally, privacy. One of the misunderstandings about private foundations is that when you give through a private foundation, it's actually not private at all. All of that information that is housed in the private foundation, whether it's, who's on the board of directors, where are the grants going out to, how much is being gifted, that's all put on public record. So the CRA actually receives all of that information and makes it available to the general public. And so if donors are looking for privacy and really trying to not disclose their name or address or information to charities and they'd rather give anonymously, that's something you can't achieve through a private foundation today, but you can do through a DAF. And so that's one of the key reasons why a lot of higher net worth donors, especially, would prefer to use a donor advised fund, is because they just, in some cases, do not want to release their name or they don't want to be recognized for their gifts. So donor advised funds are just broken down into three really simple steps. We call it the three Gs, or give, grow, grant. And I'll quickly go through kind of what that looks like to not only open and start a donor advised fund, but how to use it as well. So in this example, if a client opens a charitable investment account at CG, the account is registered under Charitable Impact Foundation, which is the name of our foundation, and registered with the CRA. So it actually doesn't it get added as a new account for the client. It actually gets added as a new account for us. So we do all the account opening with the advisor at CG. We do all the paperwork, we do all the sign-offs. And then what happens is generally donors will elect to donate cash or securities from their regular investment accounts into this new charitable investment account that belongs to us. And so there is an exchange of assets. We take over ownership of those assets once they're donated, whether it's cash or securities. But in exchange, the donor gets a tax receipt. So there is a legal transfer of ownership when assets are donated to our foundation, but that's no different than if you were to gift directly to a charity. When you're transitioning cash to them or donating a bicycle or a car, technically you are actually giving up ownership of those assets as well in those situations. So in this case here, it's usually just an internal transfer within the financial institution that you work with. The advisor kind of stick handles that transaction. And we will value those assets at whatever they're valued at for that current day. So if we accept stock today, we'll look at the closing price of that stock and issue the tax receipt out to the donor right away. One of the great things about giving through a financial institution is that when you donate publicly traded securities, you get a capital gains exemption. Now that's huge, especially for a lot of donors that do hold a lot of their assets in publicly traded securities. It's far more tax efficient than donating cash or using a credit card because the gains that are on those holdings, you're going to pay tax on them unless you find another solution like donating them in kind. So in kind means you don't sell them first and then donate the cash. It means that you actually donate the securities as is. So you transfer the shares over to a foundation like ours. We accept the gift and we issue you a tax receipt for the fair market value of those shares, but you don't have to pay the capital gains tax because the CRA does have a exemption policy if you donate in kind. So that's a really great option for those that have held stocks or ETFs or mutual funds for a long period of time. They do have some gains that you'll eventually have to pay tax on. Those gains are wiped out if you actually make donations with them. Now, growing is kind of the fun part. So, what can you do when you grow charitable assets? Well, you can actually maximize your impact. So imagine, if you were to give $1,000 to a charity today, the impact is $1,000. But if you were to donate to a foundation like Charitable Impact and take some time to decide which charities to grant out to, you could actually grow that $1,000 to $1,500 or $2,000 depending on how long you hold the account for and what you invest in. And really, you're still getting your $1,000 tax receipt for your initial contribution, but you're multiplying the impact that you're making out in the communities and with the charities that you support. So there's a really great option for those donors that don't want to grant right away or do wish to expand their impact. You do have the ability to grow your assets using regular investment portfolios and holdings. And the best part is it's tax free. So when it's held within a charity, you don't pay taxes on the interest, the gains, or the dividends that are generated through those holdings. And you're able to decide when and where you donate those shares. Jeff, did you have a question?
Yeah, just a comment. So think of it as a simple, not exactly the same, but annuitizing your giving to some level and having the flexibility. That's what the great thing with charitable impact is be able to prolong um, those giving. So it's a continual thing. As also, rather than having a big windfall, being able to smooth your donations over time as well. So you're not first on the call list the next year because you make a big check and having something that you can think about, over a much longer period of time instead of just an immediate impact.
Yeah, definitely. And that's one of the key advantages of a donor advised fund is it does separate the donation from the actual grants. So when you're donating larger amounts, particularly in a cash windfall year where you do need to minimize your tax liability, a lot of donors will make larger donations in those years to offset the tax. But donating large amounts isn't easy when you're trying to figure out which charities to grant to. And so one of the luxuries you do have is you don't have to pick a charity right away or a list of charities right away. You can take your time. You can grow those assets while you're taking that time, and you can plan out how you want to give properly without having to be rushed to do it by December 31st. So as long as you're able to contribute the assets before December 31st, you will get your tax receipt for that year. But you have an unlimited amount of time to decide when and where you want to gift those amounts out to. So that's a great point, Jeff, where it is important for donors to understand that you don't have to make those decisions right away. And we have clients that donate really large amounts that have to sometimes take years to figure that out. Um, One of the final points about growing the assets is even though you've given up ownership of the assets and it's probably invested in a regular investment portfolio, you as a donor still retain full visibility on what's happening with the account. So that's a great thing that you will continue to have as you hold a charitable investment account is you can see the gains and performance that is happening in your account. And that's something that you will continue to have throughout the lifetime of the donor advised fund. Finally, granting. So that the last G is actually choosing charities and deciding, how much to give out to each of them. So legally, when you use a donor advised fund, the donor is providing a recommendation rather than an instruction to the foundation as to where they want the gifts to go. So historically, we've never really said no to a gift, and I think it's the same thing for most other donor advised funds. The condition is it has to be a Canadian registered charity. So the thing that the CRA does mandate us to ensure is that we are making sure that funds are being dispersed out to charities that are registered and are in good standing with the CRA. So we cannot, in some cases, issue out to an international organization or to a recipient that's not considered a charity. Those are situations where we potentially have to decline the requests. But in any other case where it is clearly a registered organization that is in good standing, our platform is automatically able to accept gifts out to those charities, and that's all done electronically. So once again, there's no checks, there are no credit cards, and there's no mail being sent across the country when there's potentially a postal strike in place. So everything is done through our system, and we will ensure that the gifts are made out to the charities right away upon your request. Um, in terms of your advisor, so your advisor does play a hand in how these transactions occur. So it's a bit of a combination of ourselves working with you as the donor and your advisor to make sure that everything is handled smoothly. Typically, the donor initiates the conversation saying that they would like a gift to be made, so they make a gift recommendation. We speak with your advisor to ensure that cash is raised in your charitable investment account at your chosen financial institution, and then those funds are sent over to us, which then get forwarded on to the charity. So everyone's working together, but this is a well-established process that has been in play for many, many years. And it typically works really well because everyone's kind of on the same page in terms of what's happening. And so there are no surprises for anyone, including you as the donor. Finally, as a client, you have the flexibility to grant at any time of the year. So, are there granting restrictions? Some foundations will have restrictions, but with Charitable Impact, you can grant at any time of year and you can grant as much or as little as you'd like. So, as mentioned before, you have some donors that may not grant for years, and that's okay. But we actually do prefer for our donors to grant regularly and kind of do their part to support their community. So many of our donors do, most of our donors probably do, and it's really something that we kind of leave to you as the donor to decide on. So, you choose which charities you want to support, you choose how much to give to them, and when you want those gifts to arrive. And so, most of our activity is probably concentrated around what we call giving season, which is typically from October to December. But we do process gifts throughout the year, and that's not a problem. So this is kind of the math behind donating in-kind securities. As you kind of look at these two columns, one on the left is showing what the tax benefit would be if you sold your holdings first and then donated the cash from that, versus the column on the right, which is donating the securities in kind. And so you have the exact same profile on both. It's a $10,000 holding that you have in your account, and your original cost in those securities was $1,000. So technically, your capital gain is $9,000. In Canada, if you do decide to sell those securities out of a non-registered account, your taxable portion of that gain is half, so $4,500. So, imagining you're kind of at a 45% tax rate, you pay almost $2,000 on tax to sell that holding, and then you'd be getting a tax credit for about $4,000. So these are just rough numbers as an example. But as you can see in sort of the first column in the middle, you're getting a tax credit for 4,000, but then you also have a tax liability of about $2,000 on the gain. So your net benefit is only about half of the tax credit. Whereas if you actually donate it in kind, you don't pay any capital gains tax at all. So you get the full benefit of the tax credit, you pay no tax on it, and therefore there's no deduction on your actual tax savings.
Just to comment on that, because we have a few different clientele, have their own private businesses and some that work with securities and mining and other types of companies. You have your big win and say that's related to your company you founded or the sort, and you want to diversify it for a charitable cause, because having just one security doesn't make a lot of sense. It's a great opportunity to donate that in kind. Let them or let us diversify it into a well-balanced portfolio and grow from there. As opposed to writing those checks. And some of those ones can be pretty impactful, and you can get the credit for that year. And again, having lasting donations over a number of years and to have some consistency. And for the other people, like I mentioned, or you have cyclical businesses, you can do more of a tax smoothing element with your income, but also maintain that sort of annuitized type giving, which is great because your income might be very variable, but often the charities are pretty consistent on there, so you can match it up with their needs and your availability, which is a great aspect of it.
Yeah, that's a great point, Jeff. And that's actually a really common scenario for us. So we do have a lot of executives and high level managers that they do have some pretty concentrated holdings in one particular company. And so one great thing that they can do is obviously they can donate in kind to avoid the capital gains taxes, but then they can take that next step of actually diversifying that holding into something that's a lot more balanced. And so that often happens when we do have those type of donors come through. They're able to generate, a lot smoother returns and tax-free returns in their charitable investment account, and then ultimately gift those funds out to charity. So there are a lot more options once you're able to get it into the charity network and kind of get the tax benefit from that. But not an uncommon scenario for a lot of our donors today, where they are sitting on large gains and are kind of looking at the pros and cons of selling out those securities versus potentially finding a more tax efficient solution for that. So how do fees work? So, a lot of questions that we get are, well, what's in it for charitable impact, or what's in it for a foundation that accepts donations? And so, for the most part, our platform is free. So if donors were to use our online platform, they could use it at a very basic level and not have to pay any fees. One of the limitations of our online platform and the reason why it's free is it doesn't allow you to do any investing in it. It's really just, you fund the account and you give it away. You can hold cash in it, but you can't hold any sort of investments or portfolios. With the charitable investment account, there are fees. So we do charge our own fee in addition to the advisor that charges their fee as well. But our fees are quite reasonable, and we're largely considered to be the most cost-efficient solution in Canada today. So our typical free rates, just as an example, for us, we charge 0.5% a year based on the value of the accounts on the first $1 million of assets, and then 25 basis points for every dollar above that. So that's our current fee structure. For larger donors that we have many of, we charge a negotiable fee rate above $5 million. So yeah, just finally to sum everything up. So in terms of the client benefits, for us, we have no minimums. So it doesn't matter how much or how little you have. If you're looking to donate and you give today, Charitable Impact's a great solution for you to consolidate your giving and do so in a really low cost way. And that means we have the lowest fees in the industry. And that's something we're going to offer continually going forward. Is we want to make sure that we make giving accessible to our donors, and we do it in a way that allows them to achieve their charitable giving needs. We're not really eating into the cost or into the growth of the accounts. Our platform is accessible to every donor in Canada, but it also has access to every charitable organization in Canada as well. And so if you do support your local church, your local community, if any type of cause that you're interested in today, as long as it's registered in Canada, it will show up on our platform and be available for you to select as a recipient for your gift. So that's a great benefit. That's updated daily. So when there are new charities that arrive and others that disappear, that our database will always be up to date. So you won't have any fear of donating to an organization that's no longer registered or not in good standing. Once again, you can donate anonymously, so that's one of the few benefits that differ between ourselves and private foundations is you can donate anonymously and keep your information private so that you're not being harassed or called on a regular basis for organizations that you perhaps may not want to support anymore. And then finally, we have something called philanthropic advisory services. We have a team that's available to support you, the donor on anything that you're looking to do. So if you would like some support to perform some charity research, if you're not sure which organizations are available in your local community, or maybe you're not sure how they stack up against each other, we have a team that will do all that for you on demand and at no charge. And so all of our donors do have access to this team. They can support you with your succession planning. What happens to your donor advised fund if you pass away? You can plan that out and make sure that you have a solid plan, not only written in your will, but also filed with us so that we know how to act upon your account if something were to happen to you as a donor. And yeah, it just in terms of just making sure that we help you with, some of the financial aspects of your account, we're always there to support. So a really great benefit for those that use Charitable Impact. And just finally, we are audited by the CRA on a regular basis, just like any other charity. Our own auditors are MNP. We have our own legal counsel that supports us. And yeah, at the bottom, we just have our charity registration number. So we are actively listed on the CRA's website, and all of our information is there.
Just one question. How does one receive tax slips? Is it mail, electronic? Does CRA already have it?
So everything's electronic, which is great. So we don't mail any paper slips. All of our donors are set up with what we call an impact account on our platform. So those tax slips will be automatically available on the app or through our website for them to download at any time. It comes in a PDF format. We also can just email them directly to the donors, which we do in a lot of situations. So anytime you make a contribution, you will get a tax receipt at that point in time. And it's usually within 24 hours that you'll receive it.
Perfect. Raheem, any comments, questions?
No, this is we've had this in place for a number of clients now, and sense of pride for a number of investors. Legacy building, your own mini foundation, and I think if to think about it, it's you set up a portfolio under the Chimp banner that has your name attached to it, and yearly or various parts. You can give away capital if things make sense with respect to things tugging on your heart. The other thing is the growth of the market leads to enhanced returns. So as the market elevates, your foundation portfolio or your charitable portfolio goes up, you can set a threshold. So, put 500 grand in and it grows to 600, maybe give 5 gifts of 20,000 a year and you're back at your 500, but you couldn't have a 30, 40-year legacy of giving away capital over time. And I think that resonates with a lot of people, and in that they are picking and choosing, as Eugene and Jeff and Lawrence alluded to. Things change over time, and new charities come about, whether it's within your community or nationally, that you like to support, and you use your own foundation sort of account to do that. And I think it's a sense of pride when we speak to our clients when they are enacting these things. It's really a good feeling, and that's what charity is about, right? And I believe this really achieves a lot of those objectives for a lot of investors.
Perfect. Yeah. So a lot of flexibility here. We happy to answer any questions. Feel free to reach out to Raheem or myself. Again, this is very flexible. It's a great solution. It's like more about legacy building than just one-off things that put pressure on you on an annual basis. And this is, taking that part off your plate. You have the full backing of Charitable Impact to do all the call it grunt work and help guide you where you want to go so you can have more time focusing on the things that you want to enjoy while still taking care of the things that are very important to you. So with that, appreciate you sharing your lunch with us. Eugene, Lawrence, thanks again for your time. this will be recorded, so we'll get it off to you as soon as we get approval. But in the meantime, like I said, we're always here to help. So feel free to reach out and have a great day. Take care.
Thank you all.